Hello everyone, welcome to the Ichimoku hourly analysis for the SP 500 for Tuesday, February the 22nd, 2011. Well, a very bearish day today, and we can see here that every candle for the day's trading session was bearish. We had red-bodied candles, some fairly large red-bodied candles as well. Significantly, the market was trading up above the cloud, which meant that the market had an overall positive bias, and the market retraced in the early hours of trading. First hour of trading, the market actually tested the top of the cloud and bounced off. And we can see this shadow on the bottom of this red-bodied candle, and that represents buying power coming in. Now, we may have reasonably expected that area would hold as support once again. Now, that area also coincides with an area of previous support and resistance, which makes it a very, very strong area. You can see here previously it was resistance, and then it acted as support on a couple of other occasions. In the third hour of trading, the market actually tested that area again with a larger red-body candle, however. So as the market was testing again, we had even more bearishness, with the sellers making more net bearish progress than they had, and the market closed around that level. Certainly in the hour following that, another bearish day with the same amount of net bearish progress made by the sellers in that session. And the market tested the bottom of the cloud. Now, we may have expected to find some support around that area. But with this market being quite so bearish and us having a bullish market for quite a long period of time, it's little wonder that the market is now testing outside of the cloud. Now, a breakout outside of the cloud represents a sell signal with Ichimoku charts, and that could be fairly significant for this market. We've also had a crossover of the Tenkan-sen above the Kijun-sen, or the Tenkan-sen below the Kijun-sen, which is another sell signal, but that occurred above the cloud, so it's not a terribly strong sell signal. And if we look at the price action once the market closed outside of the cloud, it's very indecisive trading. We've had a lot of spinning top type candles which represent indecision in the market. Now, that also coincides with the market testing this major swing low down around 13.12, and we should expect that we'll look to that area in the opening hour of tomorrow's session, or the opening few hours, to hold as a level of support for this market. Down below there we have very, very strong support, and we have this line here that coincides with this swing highs, two very important tests of resistance around that area, and that area of resistance can turn into support for this market, so that's around 13.09. But if we look at this area that I've highlighted in yellow, and we come back here to this previous price action between these two lines of support and resistance, we can see a lot of indecisive type trading with a lot of shadows on the tops and bottoms of these candles, and that represents that there could be some genuine, very strong support anywhere within this area. And that area extends from 13.09 down to roughly 12.94. So if the market does continue trading down, we could look to support anywhere around that region. Now, back to our Ichimoku indicators. With the market trading down below the cloud now, we have an overall negative bias. If we look back at all of this trading, it's been some time since this market was trading below the cloud, so that could be quite significant for this market. There is a possibility that the market will retrace even more of this uptrend that the market was in. And if we also look to where the market's trading with regard to the Tenkan-sen and Kijun-sen, the market is trading down below both of those indicators, which means that the market is bearish in the fast-term and medium-term time frames. So we have an overall bearish market, so quite a bearish market, also supported by the Chiku span trading down below the corresponding price action. So there's every likelihood that the market will test below where the market's trading at the moment, although that's not necessarily supported by those three candles in the last hour of trading. Very indecisive trading and a little bit of buying coming in, but it's probably what you'd expect after we had these three big major red candles in the early hours of today's trading. So obviously for the next day's trading, in that opening hour or two, we do need to watch the low of the current candle and these areas of potential support. So they're around 13 12 roughly, extending down to 1309. Very important levels for this market. If we do see buyers coming in, then the market may retrace and test this resistance area which provided support previously, which is around 1325, which also coincides with the top of the the bottom of the cloud. So if the market rallies, that will offer some potentially strong resistance for this market, and the market could then sell off again and test down here. If the market does act in a bearish manner and trade through here, then we could expect to find support anywhere through down to roughly 1295, 1294. Below there, there isn't too much support. We actually have a window that is around the high 1280s. So that could offer strong support if the market does continue trading down through there. But there's every likelihood that the market will eventually find support anywhere between this region and down below, down to 1295. So also we do need to watch the high of the current candle for any potential higher high and higher low for that retracement back up to the cloud in this area of potential resistance.